Welcome to our deep dive into the world of international finance. Today, we're focusing on a nation known for its rich history, technological advancements, and economic prowess, Japan. But beneath the surface of this economic giant, a crisis is brewing. The Japanese yen, once a symbol of the country's economic might, is in a state of descent. It's been falling against the US dollar at an alarming rate, stirring up a storm in the global financial markets. But what's causing this downfall? And more importantly, how is it impacting Japan and the world at large? These are the questions we'll be answering in this video. So buckle up as we navigate the twists and turns of Japan's currency conundrum. Stay with us. Why is Japan's yen so weak against the US dollar? It's a question that's been echoing around the world's financial markets recently, as the yen has plummeted to its lowest level against the dollar since April 1990. The primary driver behind this downward spiral? It's the interest rate differential between Japan and the United States. Investors, always on the hunt for higher returns, have been flocking to the US, where interest rates are significantly higher than in Japan. This, in turn, has led to a weakening of the yen as demand for it decreases. But this isn't just a simple case of supply and demand. The weakening yen has far-reaching effects on Japan's economy and its citizens. On one hand, the weak yen has been a boon for Japanese exporters. Their products are now cheaper for foreign consumers, which could potentially lead to increased sales and profits. On the other hand, the weak yen also means that import costs are on the rise. This could lead to increased prices for consumers and businesses alike, potentially leading to inflation. Interestingly, the weakened yen has also led to a surge in tourism. Japan saw a record-breaking 3.1 million foreign visitors in March, with the country on track to surpass its target of 32 million annual foreign visitors this year. The weak yen is attracting tourists who are staying longer and spending more on accommodation, activities, food, and luxury goods. Yet it's not all good news. The weak yen is negatively impacting Japanese travelers, with outbound travel decreasing due to high airfare costs and low buying power. The Bank of Japan's yield curve control and low interest rates are cited as key factors behind the yen's poor performance. To stabilize the yen, experts suggest the Bank of Japan should raise rates and end quantitative easing. However, recent attempts by Japanese authorities to loosen yield restrictions have not had a significant impact, with the yen hitting a new low against the dollar. Despite a brief respite following Japan's market intervention, analysts predict the yen's advance won't last long due to diverging monetary policies and higher U.S. Treasury yields, making U.S. debt more attractive. Japan's weak trade balance and dovish policy stance also contribute to the yen's weakening. In conclusion, the yen's weakness is a complex issue, driven by a variety of factors, from interest rate differentials to inflation dynamics. It has both positive and negative impacts on the Japanese economy and its citizens. Despite attempts to stabilize the currency, the outlook for the yen remains weak. Only time will tell if the authorities' interventions will have the desired effect. As we delve further into the topic, we must consider what the future holds for the yen. Economists predict that the yen's weakness is likely to continue in the short term, given the Bank of Japan's commitment to its current monetary policies. There's also the possibility of an increase in inflation, which could further weaken the yen. However, some believe that Japan's economy could benefit from this. A weaker yen can boost exports by making Japanese goods cheaper and more competitive on the global market. This could potentially stimulate the economy and lead to increased growth. However, it's not all sunshine and roses. A weaker yen could also lead to increased import costs, which would hit consumers hard, especially in a country as dependent on imports as Japan. The situation is fluid and complex, with many variables at play. As we continue to monitor the situation, we will surely see new developments and strategies from the Bank of Japan, aimed at stabilizing the yen and the Japanese economy as a whole. Stay tuned as we navigate this economic labyrinth together.